Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, today's episode is all about the juice. Using volatility in this stock market to generate high returns using 3x ETFs to write covered calls and sell cash secure puts. Now, we're going to talk briefly about a couple cash secure puts I sold as the market was bottoming out. Then I'm going to show you how I used a 3x ETF on the Nasdaq to generate a quick 7%. I'm telling you, we can use these 3x ETFs in a conservative way, playing the indexes. But look, you have to get your financial education. You have to open up that small ball account and do your very first trade. Now, hey, look, if you've never been to my channel, this is what we do. We talk about writing covered calls and selling cash secure put using this very conservative investment strategy. But I bring it to you straight talk style, and I show you my trades. We talk about them, so maybe you learn something. I show you how much money I make as well, just to motivate you. A big part of this channel is about motivation, inspiration to get you in the game. And I show you my trades, we talk about them, so all those salty dog cover call writers can get a little bit out of it as well. Hey, look, I've done over 600 and 700 trades, over $142,000 in 3 years. I'm here to tell you, you can absolutely have success. I call it my cash printing machine. Hey, look, I do this free of charge, never ask you for a nickel. Now, with that said, I want you to share this channel. I want you to subscribe to this channel, and I want you to bang the like button. Now look, before we get going, I got to tell you a couple things. Some of you may not know some of the things that I offer. So we're going to start out right here, right now. Go to my website, ctpdashboard.com. I want you to see that I have a free newsletter. All you have to do is give me your email address. I send you my monthly newsletter. I just recently sent out the June newsletter, and in that newsletter, I have an exclusive video just for those that sign up for the newsletter. Go! It's free. I don't charge you nothing, and I definitely don't spam you. Second, I have a podcast area. Look, I know a lot of you just want to hear my stories. You want to hear my experiences. So that's what I do. When I'm in the car, because I travel a lot, I love doing covered call car session videos. I know it sounds crazy, but look, I love sharing my stories because a lot of you absolutely love it, and it's upping your game. So what I do, I'll do my Ask John covered call car session podcast where I just talk about a question that somebody sent me. And what I love doing is sharing the stories that go with it. And I do it unedited. Hey, a lot of times I'll do a 15-minute video right here. It'll take me 3 hours to edit it because once I get going, man, I can mess up. But with the podcast, it's unedited. And look, I'm just giving you the information. If you want to hear it, you want to hear it. If you don't, you don't. But that's the great thing. It's out here. I'm sharing with you my experience. These are real, timely, and relevant covered call and cash secure put trades. Another thing is the free spreadsheets I give you. Look, I created spreadsheets to help you up your game, to help me up my game. See, my mentor Jerry told me if you're going to do multiple trades multiple times a month, you got to keep the numbers in front of you. So I started creating spreadsheets. And then you folks in the video said, John, I love the video, but I want the spreadsheet. So I created homegrown spreadsheets. I upload them so you can download them for free. Look, I never charge you for a spreadsheet. So let's go ahead and get to this. If you like what you're hearing today at the channel, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing is this. I'm going to talk to you about a couple cash secure puts that I wrote recently. Just going to talk about the volatility because what I want to show you is my cover call trade with the TQs. We're going to talk about that here in a minute. But I'm just going to give you a little flavor of what I did when the market was down some 8%. Well, if you've been with my channel, you absolutely know I love Adobe. And Adobe had reached $280 a share. And I'll tell you what, I've told you from the jump, Adobe for me is the perfect cover call stock. It always goes higher. It's the Goldilocks of tech companies. They compete with everybody, but they're nobody's enemy. I absolutely love Adobe. They keep hitting their numbers. And I'll tell you what, I have owned it since it was 180, writing covered calls all last year. I think I told you in my yearly roundup, I did 25 trades on Adobe last year. Absolutely loving Adobe. Now, every time the market falls, Adobe's going to fall heavy, right? It's a $280 stock. Well, sure enough, recently Adobe fell from 280 all the way down to 255. The market from January has rallied to almost all-time highs. In fact, I think the S&P 500 hit all-time highs. Then we get the sell-off. We run them up to sell them off to run them up again, right? When we hit the high in May, sure enough, they peeled it off and the Nasdaq was down some 8%. So you know once it gets down 5%, Wall Street starts to look for value. The Nasdaq was down 8%. So this is a golden opportunity to find those great companies and look to write some cash secure puts. And that's what I did. I want to show you this trade right here. If you notice Adobe right there, I wrote the 255 at the money cash secure put when Adobe was down 12 bucks on a day. I think Adobe was trading at 256X. I wrote that 255 basically at the money, got 11 bucks. Now, I'm going to show you the chart here because what I love to do in these situations is not have the shares put to me. I love to sell the cash secured put to cherry pick the profits of a rally. And that's what I did here. So let me go ahead and show you the chart. I think you're going to like it. Now look, the blue line is Adobe and the purple line is the Dow. Now, as you can see, the Dow from its highs is absolutely peeled off and you could see it's almost down 5%. Well, for me, that's the time I'm gonna have my spidey senses up, right? Because we know once we get down 5%, Wall Street comes in. If there's not capitulation selling, they're looking to buy up that 5% sell-off. And without a crystal ball, I actually called this rally in my last video. It is absolutely amazing when the Dow hits that 5% sell-off. They rallied up. Now, we did get some good news from the Fed and the China trade war talk is simmered down. But it's no coincidence to me that it happened at the 5% mark. Now, with that said, notice Adobe. Adobe is hammered hard. And sure enough, at 256X, I'm thinking that's the perfect time to write that cash secure put. And at the money cash secure put, sure enough, I get 11 bucks for that. I did a 2-month trade. 2 months, because I figured the Dow might be a little bit in flux here. It's going to bounce between down 5% to maybe down 7%. So I gave myself a 2-month window. So I was able to get that fat cash secure put premium of 11 bucks because I felt that once we got the bounce, Adobe would bounce and that 11 bucks would shrink to nothing. And sure enough, look what we get. We get that very positive bounce. Adobe is rallying back to 270. And of course, you know what I do, 1 in the hand versus 2 in the bush. So when that option, that $11 option got down 50% in just 2 days, took that off the board. I put it in a buy at about 6 bucks and sure enough, that trades off the board. I pocket the rest. That's a $495 crumb in 2 days. Man, I will take that every single time. Now, I did that with UDOW as well. UDOW had fallen down to 85. So at 85, I sold a cash secured put at the money, 85, got 650 for it. And as the Dow rallies, so does UDOW. In 1 day, took that off the board for 3 bucks. Absolutely love cherry picking the cash secured put trade when the markets are super volatile. That's what I call juice. Absolutely love the juice. Now let's go ahead and get to the TQs because this is a great trade. I'm absolutely falling in love with these 3X ETFs, giving me that juice. Now, before I show you the trade on the TQs, what I want to do is show you the Nasdaq. You can see how the Nasdaq is absolutely peeled off. And look, it's down 8% when I do this trade. So for me, I'm thinking, hey, this is a great opportunity to play an index, to play a market move. And that's where I believe using ETFs in a very conservative way. We can use the volatility of a 2X or a 3X ETF, but yet we're still keeping it conservative. We're going to play the stock market, right? When I play UDOW, I'm playing the Dow. So for me, I'm really going to understand the movement in the Dow. And when it gets down to those support lines, I'm going to play UDOW for a nice little rally. Again, it's conservative because we're playing an index. We're not playing an individual stock like Alibaba or Win, where in my last video, I told you I'm down some 30K. I love indexes because indexes are a basket of stocks, right? So instead of owning the risk of Adobe and Win and all that comes with that, we're owning a basket of stocks in the ETF. And in the case of the S&P 500, Dow and Nasdaq, that basket is huge and diversified. So if I'm going to play the movement, the directional trade that is the movement of these different indexes, I'm going to play it with some juice. I'm going to play the 3X ETFs. But again, I have my financial education. I'm confident with the strategy, right? I've done this, so I have the experience. I know the expectation. That's why I always stress to you, you need to have that. So with that said, absolutely love how the Nasdaq peeled off some 8%, and I'm looking to make another trade. I'm going to try to benefit, possibly moving just 8%. I'm not really even looking for the Nasdaq to reach all-time highs. I think Wall Street sells them off and they, if anything, buy them back to where they started to sell off. So this could be a nice 8% rally in the Nasdaq, which if I'm buying the 3X ETF, the TQs, that's a 24% move. But look, I'm not looking to make the 24%. What I'm looking to do is find that low risk entry. We write that out of the money covered call, picking up that 7% on a nice 20, 30-day trade. Hey, look, I've told you, pick up crumbs, keep your hurdles low, have success. We do not need to overreach right here. And that's what I did. Let me show you the TQs trade that I did, and we'll talk about why I did. Now, you don't need to be a charting expert to see what I see, okay? Here's the deal. The Nasdaq had fallen some 8%. So obviously, the TQs are falling with it. The TQs, TQQQ, is the ProShares 3X ETF to the Nasdaq. Well, all of the FANG stocks have been getting hammered. In fact, Apple fell from 210 down to 170. So you knew if they were going to rally the market, they're going to rally the Nasdaq. And that's the bet I was willing to make. So when I looked at the chart, look where the TQs is at. They sit at the bottom of the Keltner channel, right? Their RSI is below 50, which 30 and 40 represents oversold. And look at the MACD the last time it sold off. We're looking like we're going to make that cross again, right? So I'm sitting here thinking, this is absolutely a great low risk entry. Now, do I think the Nasdaq's going to fall further? I don't know. I don't have a crystal ball. But if I'm going to buy, I want a low risk entry. And this is about as low risk entry as I can get right here, right now. And sure enough, when I bought the TQs at 51.36, it was already moving higher. I wrote the 53.50. I got paid 170 for 16 days. That's a 7% trade. That's a little crumb. We pick it up, we have our shares taken away, and we move on. The TQs are now trading at 55x, and I couldn't be happier. They're going to take my shares away from me at 53.50. I pocket the stock gain, the 170 premium. Look, that's cash on cash, 7%. And if I can do that every single time, man, I'm knocking it down. And that's my mindset. I've told you from the jump, my mindset is not to hit home runs. See, I get emails all the time where people say, look, you could have bought the TQs at 51.36 and just held it, and it's now trading at 55x, and it's probably going back to 70. But look, that's not what I do. So for me, I have a buy and hold mentality, but the way I see it is this: what goes up will come down. Look, I owned Nvidia at 180. I wrote covered calls, had my shares taken away, and when it went to 280, man, I was getting bashed in the email saying you gave up all that upside. And it didn't take but 6 months, and Nvidia is trading at 139. So please, with the buy and hold and coulda, woulda, shoulda. I love picking up my crumbs. We move on. I have a strategy. I stick with the strategy. All I can tell you is that it's successful for me. Now, look, I'm going to encourage you to go back to my website, go to podcasts, and listen to the 3X ETF podcast. Now, I also have 2 videos that I did the beginning of this year talking about how I use UDAO for this juice that I always talk about. Look, I know a lot of you sit out there and think this is nothing more than swing trading, selling premium. And to be honest, you're right. It's a directional trade. But for me, it's a strategy that's been successful. I'm going to use those 3X ETFs in a very measured way. You're going to listen in that podcast where I only buy so many shares of UDAO. And once I use all of my bullets, I don't buy any more UDAO. And the same with the TQs. I have a very measured approach. I'm going to be diversified in my portfolio, but I am going to use these ETFs for the juice that I like. Hey, look, if you like this video today and you want more like it, bang that like button, because I know a lot of you want to hear about the weekly covered call where you're knocking down the weekly income, and we're going to talk about that next week. That's why I want you to come back. So I want you to subscribe to the channel. Hey, look, until next time, I hope all your covered calls are profitable.